Hello and welcome back. Today we're tearing into the bitter clash between California Governor Gavin Newsom and auto giant General Motors. Newsom is blasting GM CEO Mary Barra, accusing the company of backsliding on EV subsidies and challenging California's green push. But is Newsom right to panic, or is GM making the smart economic move? Let's challenge the consensus.
The narrative paints GM's move as a retreat, but let's be intellectual opponents here. This might be a sign of a necessary market correction. The U.S. market is not ready for an all-out, immediate EV pivot. GM's pause on subsidies and production targets reflects real-world consumer demand, the cost of charging infrastructure, and the need to achieve profitability before scale. This is not a failure of will. It's a failure of policy timing. Pushing too fast leads to wasted capital and eventually market collapse. GM is prioritizing sustainable growth over political deadlines.
The direct impact is simple. GM's strategic shift influences competitors and the supply chain. Companies producing batteries and parts will see fluctuating demand. However, this is where the IRA and CHIPS Act investments we previously discussed become crucial. Any slowdown in one area can be buffered by massive federal money pouring into domestic battery and component production. The U.S. supply chain is becoming more resilient, making this specific spat less disruptive than it would have been 5 years ago.
Let's focus on the policy dance. Newsom's highly public criticism is a political power play. It puts pressure on GM, yes, but it also distracts from the challenges of California's own EV infrastructure rollout. This corporate political friction creates policy uncertainty, which is the true enemy of investment. Investors hate uncertainty far more than they hate a calculated slowdown.
So, what's the overall tone? It's cautious and fundamentally self-correcting. We disagree with the notion of a significant negative impact. GM's caution suggests the company is acting responsibly towards its shareholders and the long-term health of its product line. The slight negative resides in the political noise and uncertainty it creates, not in GM's calculated business decision. The key question for the U.S. economy is whether the government can support the supply side with factories and subsidies, while the demand side, consumers,
closely monitoring
catches
market
up naturally.
trends.